Hey everyone, and welcome to our latest market update. We're going to dig into some of the massive forces that are shaping stocks, precious metals, and crypto right now, and take a look at what could be lurking just around the corner.
So here's the game plan. We'll kick things off with the easiest ways to get into the US markets. Then we'll check in on gold and silver. After that, we dive into what's giving crypto a little boost right now, before zooming way out to look at a potential recession, a wild new financial system called the Finternet, and finally, how you can even begin to prepare for all this. Okay, let's just dive right in. If you're looking to get exposure to the US stock market, there are a couple of main ways people usually go about it.
So you've got two main choices here. On one side, you have mutual funds. Now, these tend to have higher fees, they can be a bit clunky when it comes to taxes, and you can only buy or sell them once a day. But then you have ETFs, or exchange-traded funds. These are a whole different ballgame. Lower fees, way more tax efficient, and you can trade them all day long, just like you would with an individual stock. That flexibility is why so many people prefer them.
So, what are the actual tickers to look for? Well, if you want to track the big tech companies in the Nasdaq 100, the most famous one is QQQ. There's also QQQM, which is pretty much the same thing, just with a slightly lower fee. And for the broader S&P 500, the big one is SPY, and its lower-cost cousin is SPLG. These are your direct lines to the biggest players in the US market. All right, let's switch gears. We're moving from stocks over to the world of traditional safe havens. We're talking gold and silver. And the outlook here is frankly really strong. Both metals are looking good, but the interesting part is what happens after a potential recession. Gold, well, everyone expects it to be the first thing to bounce back. But silver, now that's where it gets exciting. A lot of folks believe silver has way more upside potential, which makes it a really compelling asset to watch right now. And now, let's talk about the digital world. You know, for the very near future, the crypto market isn't really moving because of fundamentals or some new breakthrough tech. Nope, it's being pushed around by one single, powerful, invisible force. I love this metaphor because it's just so perfect. Think of global liquidity, all that cash sloshing around the world's financial system, as a powerful wind. When that wind starts blowing, it doesn't just lift one boat, it lifts all the boats. Stocks, crypto, you name it. It's the force that can make everything go up, even when the economy itself looks a little shaky. So, what's this wind doing for crypto right now? Well, the forecast suggests we might get a nice little lift for the next 2 or 3 weeks. But after that, watch out. October could get really choppy, maybe even go negative. We might not see a real chance for recovery until we get into mid-November or December. It just goes to show you can't rely on this wind forever. And this right here, this is the critical million-dollar question. These short-term boosts are nice, for sure, but they don't last. So what happens when that wind just dies down? A much, much bigger storm could be gathering on the horizon. That question leads us directly to the elephant in the room, the very real and growing possibility of a US recession next year. And if that happens, we're not talking about a small dip. We're talking about something that could trigger a massive waterfall across all risk assets. Let's actually put some numbers on this, and, well, they're not pretty. In a really bad recession, projections show the tech-heavy Nasdaq could get hammered, potentially falling by as much as 60%. And if you think that's bad, for crypto, the risk gets magnified. Bitcoin tends to move with other risk assets, so in that same scenario, it could see a gut-wrenching fall of 80%. But the biggest danger, the area that could get absolutely wiped out, is the altcoin market. These are the most volatile assets out there, and they could face drawdowns of 95% or even more. For many projects, that would be game over. But believe it or not, a massive market crash might not even be the biggest threat on the table. Because behind the scenes, some of the world's most powerful financial institutions are planning a complete overhaul of the entire system. It's called the Finternet. This is a concept being pushed by the Bank for International Settlements. You can think of them as the central bank for all the other central banks. And their vision is to create one single unified ledger to tokenize everything. Stocks, real estate, your bank deposits, all of it on one controllable system. And don't think this is just some academic paper. There's a clear top-down plan to make this happen. The BIS draws up the grand design. Then the IMF figures out how to actually implement it. And finally, they hand the playbook to central banks all over the world to execute it on the ground. The scope here is just staggering. They want a single ledger for pretty much every type of financial asset you can imagine. And in a world like that, where do you think decentralized crypto fits in? Well, they don't see it as an innovation. They see it as a competitor, one that needs to be controlled.
And this is where the two huge threats we've been talking about collide. A major recession would crush crypto prices and shatter investor confidence. And that weakness, well, that would be the perfect opportunity, the perfect cover for regulators to swoop in with their own centralized systems and push decentralized crypto to the margins.
So, okay, let's pause. With a possible recession on one side and the rise of this finternet on the other, how are we supposed to think about which assets can actually recover from all this? This is the key difference right here. On one side, you have traditional assets, gold, silver, the S&P 500. History shows that after a crash, they eventually come back. There's a high degree of confidence there. But for crypto, the future is really uncertain. It's not just about recovering from a price crash. It's about surviving a direct challenge from a new global system designed to replace it. And all of this leaves us with one final massive question to think about. As the powers that be push us towards a world of total financial centralization and control, we all have to ask ourselves, where does true value actually come from? And where will it reside in the future? That's all we've got for you in this update. Thank you so much for joining us to walk through these pretty complex but absolutely critical topics. We really hope this gave you a clearer picture of the forces at play. If you found it valuable, your subscription and likes are a huge help and let us keep making this content for you. We'll see you on the next one.